Welcome to the Friday Gimbal meeting. It's great to see you all. Want you to know real quickly as I share the screen here, Amanda is not with us today, so it's all dependent on me and driving this ship, and that is not my strong suit, but here we go. We have no crystal balls. We used to. Somebody stole it, though. It was really a heartbreaking event for me because it was a marble thing my dad gave me. This is strictly our opinions. Content provided at this event is for general information only and not intended to provide specific advice or recommendations for any individual. If you're looking for that, don't listen to this. You need to call us, your valued advisors. All indices are unmanaged and may not be invested into directly. Any economic forecasts set forth during this event today may not develop as predicted, and there can be no guarantee that any strategy will be successful. Even buy and hold may not be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Another disclaimer is if you use those real light bulbs, those big mamas on a real Christmas tree, there could be a fire, but don't let that cause you to avoid using a Christmas tree. Securities offered through LPL Financial, member FINRA and SIPC. Investment advice offered through Gimbal Financial, a registered investment advisor, and a separate entity from LPL Financial. And there you have it, folks. You are safe to listen now.
I had to really wander through Target to find a Christmas tree that wasn't already pre-lit. A pre-lit Christmas tree. I mean, that's pretty cool to just be able to pop it up, but I was worried that oh, there you go, that the longevity of the tree wouldn't be all that long because lights tend to burn out fast.
Oh yeah. Oh. That's, I mean, when we put our Christmas tree up last week, the kids, they're adult kids now, they were taunting about the annual routine of the dialogue between Connie and me. And, you know, we never have enough lights on the tree. I always get frustrated throwing a lot of strings of lights away that aren't working.
Yeah.
And so there's just, the lights are one of those parts that they just never work, probably more than half of a season for us.
One of the best lights on our tree happens in January where we put it in the fire pit. That lights up pretty fast.
Oh, that's, you're talking about those real trees. That's man, fires. That we probably shouldn't go there.
Yeah, we probably shouldn't go there.
You need to use a fire extinguisher around fires, folks.
What are we talking about today?
Well, it's a beautiful day. Could be the. I've talked about to people already this morning. I'm gonna have to get out today because the weather in Indianapolis is getting ready to go winterize for us. But that wasn't really what we need to talk about. I had this. I saw on one of the social media things this chart right here, and
yeah, we talked about that.
Yeah, and I was trying to put it in perspective. This chart was showing the number. It was, and I try to listen to everybody's opinion, and but a number of months ago, I mentioned one of our newsletters, How to Lie, the book How to Lie with Statistics. And so since I'm kind of a numbers guy, that's the way my brain works. I see a lot of things in numbers. And so when I see a chart that looks to argue something, I look to see if the data looks realistic. And this was from the European CDC. They issued it at the end of November. Or it wasn't really the end because I saw it in November. So what it was showing was the independent countries in Europe and their data points of how each country had reported their percentage of vaccination, and with this new variant, how many people have died from that. And what the chart shows is that up at the top were the people that had vaccinations really high, down at the bottom really low, and they used really like scary colors on the chart, right? So it's blue, makes you feel good like the sky out there, and red makes my heart, you know, it's like the stock market some days. Red makes my heart skip. But then I looked at the data, and so as I was thinking about that data, there was a couple places that hadn't had any deaths per million yet, but just the average of the ones that had like 70% vaccination or more, the average of those was probably about 10 deaths per million with this new variant. And then down where it's orange and red, there are those countries that had lesser amounts of vaccinations. The average was probably 100 deaths per million. So what did I say, 10? Did I say 10 on the first one? I forgot what I said, 10 or 100. And so I was thinking about that. And what I realized is that it didn't mean anything. Like in a million people, the difference between 10 and 300 is a far extreme number that's not even a rounding error. And so then with that, I then went to this chart. And this is from the US CDC, this is the US Social Security Administration. I saw it up here at the top, I saw something that said CDC earlier, but the percentage right now in any of these on that chart I just showed you, shows you the life this shows you the life expectancy at birth. I had this conversation with Eric earlier, and so this is the life expectancy at birth for a 0-year-old, or the life expectancy of a 1-year-old, 2-year-old, 3-year-old, and the probability, or this is the inverse, the probability of dying is 0.00681. And what that really breaks down to is you start with 100,000. At the end of 1 year, 99,392 boys survive that first year, which is, it's basically 99% or more are going to survive that. And the same with the females, it's over 99% survival rate. And then each year they subtract out the number of people that die. See that, so it goes down, the number gets smaller each year. So that first year is really a high risk year compared to the second or third year. And that's really improved over the years in US healthcare, because infant mortality rates have just dropped dramatically. And so this number is going to be much better than a lot of places around the world. But what it showed me is that your probability of death was only 0.006 at birth. And this probability on this thing is like 0.00003, something like that. And so what this chart would do is, when you look at the colors, it would make, what this chart would do is make you anxious about what's going on with this variant. And what I was trying to put it in my own mindset of how to look at these numbers, it would be, putting this chart up would be the same or even worse if I went to all these future parents and told them, these are the ways your kids could die this first year of their life, which nobody does that, right? Like nobody does. And this is a lesser percentage. And so I just wanted to put the numbers in perspective. I'm not trying to ignore anything. COVID is bad, particularly if you get it. We've had a friend that just got out of the hospital yesterday. I'm just saying, if you look at the data, it shouldn't scare you as much as what some of the presentations of the data is doing.
I think a theme of several of these calls have been risk, and risk on, risk off. And there's just some things in life you gotta take a step outside.
Yeah.
You know, like our son recently turned 16, and I've had several people ask me, were you nervous about him driving? And really, I wasn't. I'm not anxious at all about him driving around town. Yesterday, I was more nervous giving him authorization to get on Snapchat for the first time. Yeah. And so I was more anxious about that, because I don't really understand that. I can't control it. I have no idea what's coming in and out. And so we all have risk out there, but it was a good risk for him to take with Snapchat, because he's proven to me that he's a good communicator, and this is a communication tool. So I think as a parent, just trying to look at risk, look at opportunity and reward, it's a tough balance. And death is the ultimate one, where nobody wants to go there today. And so I can see why, those numbers can raise red colors or orange colors. But when you look at the data, there's every reason to get outside today. Take a step outside.
Well, and if you, those who listen regularly know I'll throw something outside the box here. But if you define risk as an unexpected outcome, which is a normal definition of risk, there is zero risk of death.
That's true.
It's 100% certain. And that's
you can't risk transfer that.
No. And so that's part of my personality. You all have to appreciate. I 100% accept that I'm going to die, and I make decisions based on that risk. So if I were to make decisions based on COVID, early on, I was a lot more cautious than I am today, based on the data and the way I've read the data and watched the things. And so, so there's enough data now for me, I think, to make an intelligent decision. And I know if I pull up this chart again, Doug, unless I close that out.
While you're doing that, one of Keith's buddies is a fighter pilot, and he's the real deal.
He's cool.
He's just really cool. And he told me once, I really like this. He told me it's about calculated risks.
Yeah, that's yeah, it'd be stupid for me to
for the
go
two
jump
of us
off
to
of,
get up in a plane today and try.
Yeah. Yeah. Let me show you. I deleted
Although
that.
we'd have a lot of fun.
Oh man, can you imagine? So you go ahead and jump into something. I'll go back to what I was wanting to show real quick here.
You want me to jump into what I was thinking today?
Yeah, and I'll come back to this.
Okay. I had Caroline, the boys, and I had pizza with some really good friends a couple weeks ago, and we were talking about opportunities out there. And this guy and his wife are business owners. They've got some cool things happening, and he had learned a long time ago that if you aim for margin, you miss the mission. And aim for margin, miss the mission. And that really, that was a quick little saying that really jumped out to me. And so something I've been doing here lately is I've just been asking people, what is a cool thing that you've spent money on? Where's your money go that when you look back, you're like, yeah, that was a cool thing. And here's what I've got so far. Now most of the people here, let's see, I've got ages 45, 46, 47, 45, 43, 42. I've got a 60, a 62. And so if you're looking for Christmas gifts and you have somebody in their 40s, I might have some great answers for you today. But check this out. These are some areas where people have said, and one guy in his 60s, he told me this. He said, hiring a personal trainer was one of the best things he's ever spent money on. I said, well, how'd you come to that place where he spent money on a personal trainer? He said he looked, he said his son got married and was looking at the photos and he didn't recognize one of the guys in the photo. And it was him. So we all see ourselves one way, in reality, it's another. So that was 6 years ago, but that was a big deal for him. Another guy said he joined Oregon Fishing Club. So Oregon has all these lakes and there's this club that has access to lakes. Again, that's not an expensive thing. Another guy said coffee daily. That's how he's met relationships. One of our friends said, darn tough socks. You ever heard of darn tough socks?
I have those, yeah.
You got darn tough socks?
I have darn tough, yes.
Right.
Yeah.
This guy is so impressed by darn tough socks. Hey, maybe this is an endorsement for darn tough socks. But he is so impressed by him. He's buying his whole company darn tough socks tonight. So if you're listening from the state south of Indiana, just south of Indiana, plug your ears, but that's what you're getting for Christmas. Is darn tough sock. A good bed was one. You sleep there, you're there 7-8 hours. Therapy and development on someone's self was another. A motorcycle, trips with kids, and gifts for friends. But here's the one that takes the cake for me. And these people are two great people. But this is what she said. She's 45. She said the best thing she ever spent money on was signing up on OkCupid, which I have no idea.
I didn't know that was a thing.
What OkCupid is, but so I had to ask her. I didn't want to Google it. And so OkCupid was like eHarmony.
Okay.
And she signed up. It was a free thing, and it's where she met her husband. And so she said it's worth every penny.
How
cool is that?
I had lunch with a client and his wife that he's in his 80s a couple weeks ago, and I just, while we were talking, said, where did you guys meet? And it was Match.com, and they've been married a decade. So 70-year-olds are using these things, which is really cool to me. I had a gift suggestion from a conversation I had with a client this morning. She told her children, don't buy me gifts, I just want to be together. And they might take that as a superficial answer, but she has everything she wants. And so the answer would be, why not schedule a getaway weekend with the kids and grandma? You know, that's a way to do the same thing rather than give her something she's going to stack on a shelf. So that's really cool.
Yeah. Do you have something that comes to mind? Something that you've spent money on that's really good?
Our RV trip to Alaska was life-changing, and it was not a inexpensive.
Right.
There are a lot of variables. I mean, we had a budget in excess of $5,000 just for repairs of the RV for the trip, if that gives you an idea.
Yeah.
And we thankfully we didn't use all of that. We did get to use some of it. So
that's good. Yeah, I would invite you guys to jump in, and would absolutely love an email or a call from you. Just, what have you spent money on that's really worthwhile? And it can be a big thing. I had two guys follow up to this question. I had two guys follow up with pickup trucks. And so like, it could be that, it could be a dog. One guy said a dog. Yeah, it could be expensive. It could be light. It could be lighthearted. It could be, something you always wanted. But just curious, what is really great. And that helps us as we're planning. I mean, the last thing we want you to do is just keep investing, and not use the money.
Right. That's, I think we would say that if we haven't helped you chase after your dreams, we've not done our role successfully. I think that would be a fair statement.
Yeah, I think so too.
Yeah. I want to go back to this real quickly, just to give you a perspective. And I don't.
Is this a life expectancy?
It's the same table I was showing you earlier, but I just want to. So if I go down here to the bottom, we get you to 115 years old, your probability of not making it through the year is 72.3%. Does that surprise anybody though?
I mean, actually, that's probably much better than I thought.
I mean, yeah, you have basically a 25% chance if you make it to 115 to get to 116, but it's not surprising that it. So even at 99,
yeah, that looks pretty good.
You still have a chance to get to 100. But so if so far the fatality rate supposedly of COVID is 0.6, I think there's a 99.4% survival rate. So 99.4 survival rate. Well, I hit a key birthday this year, and it's right here on this chart here. Well, my survival rate for this year is less than 99%, just because I made it to this birthday. Mm-hmm. Does that make sense to you all? So we're just trying to point out the reality of data that there's a 1.1% chance I'm not going to make it this year. I don't stay awake and stare at the ceiling. And this is just on the Social Security. This is how Social Security decides how much money to give you all. And
I think one of the toughest parts, though, is either we all know somebody, or through social media, you heard about somebody's story, or you've seen somebody's story that's kind of on the edges, the extremes. Maybe you know somebody who got the jabs and they have a heart condition, or somebody who didn't and they've got fluid on the lungs. I mean, we all. And so we're pulled these ways with our feeler and with our personal ties. Yeah. And so just looking at the data every now and then, it is a good reminder. It gives you something to stand on beyond maybe what your neighbor or your friend on social media has experienced.
And so if I've got a 99% survival rate this year, irregardless of anything going around in the air or whatever, it would make sense that I would spend 99% of my time trying to figure out how to live.
And wearing really good socks.
Darn tough ones. All right, there you go. I only bring all this COVID stuff up because I see anxiety levels going up.
And I'm glad you do. These are the issues of the day. I had a client say to me this week, I really appreciate her. She says, "Doug, are you down on the Democrats?"
I'm not down on anybody.
And I said, yes, I'm down on the Democrats, and I'm also down on the Republicans because they keep spending my grandkids' money, and I don't have any grandkids. But it's important to talk about the issues of the day, whether those be the bills that come out of Washington or the data that comes out through the CDC. Being able to talk about this stuff takes the edge off.
Right.
Takes some of the power out of it.
Yeah, I think if you focus your time on trying to figure out how to live better rather than to be afraid, there's an old saying, perfect love casts out all fear. If you can love and live better, sounds like it's something you ought to put over your door. But if you can do those things, all the noise of possibilities, there's just possibilities that could go wrong in everything. But why focus on those when you can focus on living large? So let's go to the markets real quick. One of the data points I've been showing you is this spreadsheet that I keep up to date here. This is a running, I started keeping this spreadsheet back in August, and it shows you the number of stocks in our software program that we study. It's grown from 89.50 all the way to 92.85 this week. That tends to normally be the case when you have a growing market, because those people that have private companies that want to cash them in at a high start doing that as the market levels go higher. So you can see that there's been a lot of people capitalizing on a nice strong market. Then the second and third and fourth columns, this is the 21-day moving average, which will show you a chart of that, and it's showing the number of the stocks in that total that are below the 21-day moving average. That's the last 21 days, the average stock price of that stock. So those are short-term trending downward. Then the 50-day moving average is a little bit longer, and the 200-day is a pretty long. It kind of gives you the general trend. So when we started looking at these numbers were 2,600, 41, and 34, 85. Last Friday, we didn't do this because we were kind of celebrating the holidays, but we were still working. And what happened the week before was we saw that half of the stocks, I put it yellow on here to say when you went above half of the stocks 2 weeks ago were trading below their 21-day. Short term, they were doing a little bit of a correction. Last week, over half the stocks dropped below their 50-day moving average. And then this week, we've seen more than half of the stocks drop below their 200-day moving average. We've been following data for several weeks that says 70% of the NASDAQ stocks are traded below their 200-day moving average. So that basically tells you that stocks are not hitting new highs, even if the indices are way up by their new high numbers. And
the indices might be hitting a new high or way up above their averages because of just a few stocks.
Yes.
Yeah. And so maybe a few of those stocks are still looking pretty good, but overall the trend is getting more difficult.
And that's kind of why we started that chart, to show you that even though the indices were hitting new highs back then, that there were risk in the market, because the turbulence beneath the top of the water before what you see was grinding around there. And this gives you a picture of the NASDAQ. It's been very strong this year. And you can see it has this red line right here is that's the 50-day moving average that we talked about right there. It tested it last Friday, and this is why we became active last Friday, is that that volume bar right down there was a high volume. Well, that wasn't Friday. Sorry, this is Friday right here.
A lot of sellers for half the market being on vacation.
Yeah, so I highlighted the wrong one. This was the midweek sell-off this week, but this one over here, it was Friday, and it was just below average market volume. But normally on the day after Thanksgiving, there's just nobody in the office. So we would have preferred to not been in the office, but we were keeping an eye on things so we could act accordingly. But we saw the follow-up of that selling going on I think it was Tuesday or Wednesday. And
that's a normal thing to see some follow-up.
Absolutely.
After a big sell-off, to see some follow-up, or maybe you get a little bit of a bounce and then it could retest that and then go lower.
Yeah, and so that gives you a picture of what went on here in the last week or so of the NASDAQ. You can kind of see it kind of rounding around up here, and it's done that a number of times, but we've seen this volume pick up. We call that distribution as an industry term that we use, and it had some distribution. You see a big high volume. Look at that, sell off earlier this week on the S&P 500. That was a real high volume day. That was coming off that high. And so the same thing you see right here, this red is the 50-day moving average. And throughout this year, it's come down to the 50-day moving average a number of times and then bounced upward on it. And that's what we're watching for. So if we can't get a little bit of a bounce here, but by taking some money out of the market as we've done this week, it's just basically, said, hey, if this thing drops below the 50-day moving average, I think our expectation would be come down to this level down here. That's our expectation. As a disclaimer said, there's no guarantees anything will work, but it's our view of what we're watching for.
Can you throw the VIX on real quick?
Yeah, before I do that, let me go to the S&P 600 to give you a flavor of, this is the one we've talked about a number of times this year. We were hopeful that it would get above this level, that we were kind of getting bullish on it if it could. It got above it, and then it just reversed down, and it's really struggled. If you look over here on this right-hand side here, a lot of the days have been down days on pretty good volume. And so our hopes on that one haven't worked out as we hoped they would. And it's already come back down to the 200-day moving average, which wasn't as far of a drop because it didn't keep going up all year like the other ones. It flattened out here. So that what happened with the 200-day moving average is it's come up to the actual valuations of the market. So it's testing that 200-day moving average now. The VIX. Oh, I put an O there. Looked like I lost. So this is the volatility index of the S&P 500. Historically, over that 28 number here has become a kind of a place where you need to really pay close attention. And we definitely spiked up to that here in the last few days.
Yeah. And so this just tells Keith and I that you need to be on alert. Make sure that you know where your stock positions are, know what the thresholds of pain are. That's something for you to know in your own account. And this week we took a call from a lady who's had a legacy position with a certain company, and her threshold for pain was met.
Yeah.
And just talking about, okay, well, how do you exit, and what's a smart way to do it? And so indicators like this just help us know, where is the market going? Where is the risk? Is the risk increasing where we might be a little more risk off, or is the risk reasonable and we can be a little more risk on?
Yeah, I just pulled up a historical one here, Doug, that this is 2019. This was before the COVID kicked in, but we had in 2018 over here to the left side, we had a horrible fourth quarter in the market, and it shot up from the VIX from the volatility. Yeah, this is like 10 to 15, and it shot up in that fourth quarter. Then if we go to 20, we put the year in 2020, the COVID was such a radical thing that it shot up to 85, which I'm pretty sure is an unprecedented experience in there.
And that's just as real as anything else. I know it was a kind of a rare time,
right?
You go back to that 18 time frame, and to me that's always a little more realistic. But both hurt.
Yeah,